So with that, we'll just jump right in. We have a couple of presenters from the CUCollaborate side of things. Jason, could you provide your quick bio for us?
Sure. Thank you, Ben, and welcome everybody. Excited to be presenting on the Low Income Designation to you all. An advisory director with CUCollaborate. I head up our beneficial regulatory program practice that covers LID, CDFI, as well as grant writing. I've got just over 12 years of experience in consulting, mainly in finance, data analytics, business process improvement. Before coming to CUCollaborate, I worked in the federal government consulting space for Booz Allen Hamilton and Grant Thornton. And I live in DC with my wife and my cat. Back to you,
Wonderful. Thank you, Jason. We're really lucky to have folks like Jason on our team here at CUCollaborate. Again, my name is Ben Herring. I'm the Director of Partnerships here with CUCollaborate. I've also been in credit unions here for the 12-year mark. And I've been with a credit union. I'm in Minnesota myself, and was with a larger federally chartered multi-common bond credit union here, Affinity Plus Federal Credit Union, if I have any of my Affinity Plusers on the line, hi. And then also spent the past 5 years prior to joining the team here at CUCollaborate at the League in Minnesota, the Minnesota Credit Union Network. So I have kind of this perspective from a few different angles, and excited to take on partnerships with CUCollaborate. I'll talk a little bit more about that later on in our presentation here today. But for those of you who, and really nice to see some familiar names, and certainly some names I haven't yet met. For those of you who don't know much about what we do and maybe why we're putting on a webinar like this, what puts us in a position to present well to these topics is wanted to share a little bit about what CUCollaborate does and who we are. So we're known as a consultancy in the credit union space that really champions credit union growth. And we say we do so through disruptive innovation. We look at problem solving in really unique ways and have kind of crafted a business around helping credit unions explore ways to expand into new markets, helping to reach more folks in their communities, reaching marginalized communities within the geographies that they serve. And we've been doing so not only through consultancy, but have also been growing our software. And so just one quick slide on some of the things that we do, and this will transition nicely, I think, into Jason's presentation around the low income designation, which is all the things that we do. So we get into a lot of different lines of business, but again, all under the umbrella of credit union growth, reaching more members. And so we do so through impact and performance software. We do operate a data consortium with analytics and do things like impact quantification, member benefit analysis, benchmarking, demographics, and of course, low income designation and CDFI progress tracking. We also operate a member eligibility intelligent routing layer that allows us to have an externally facing website that can capture in prospective members for credit unions. We can actually help credit unions with identifying and prospecting select employee groups, SEGs out there. And then we also have a map that we've built to support our consulting, but also that credit unions can utilize to do a lot of the things that they're looking to do as far as visualizing their geographies that they serve. And finally, obviously, we provide a lot of consulting services, many of which you can see on the screen here today. And not the least of which is helping credit unions obtain and retain their low income designation. So with that, I'm going to hand it back over to Jason, and really looking forward to hearing more about low income designation here today. Jason?
Great. Thank you, Ben. That was a fantastic intro. So to start us off, let's go to the next slide, and I'll give a high-level overview of the low income designation. So first off, to obtain the low income designation, or LID, credit union needs to show that a majority of its membership meets the regulatory definition of low income. The main way the NCUA qualifies members as low income is based on their address. So they will geocode the addresses and determine how many of those members reside in low income geographies. These are geographies that meet specific criteria. Generally speaking, it's having a median family income of 80% or less than the benchmark income. There are some additional populations, additional member types that can qualify as low income. So high school students, college, university, and vocational students all count. For college and university students, the credit union would need to provide a specific method of how they verify enrollment status. And a majority of military members can count as low income as well. In terms of who doesn't count as low income, there's two categories to be aware of. The first are members with PO boxes automatically do not count. This is because PO boxes cannot be accurately geocoded, and so the NCUA has no way of being able to determine whether or not the member lives in a low-income area. The next type of address that gets automatically counted as not lived are addresses that the U.S. Postal Service has designated as business addresses. Next slide. In addition to the credit union's actual membership, there is another pathway to LID that's limited to federal community credit unions. So federal community credit unions may qualify for LID based on their potential membership. So if you look at the population of your geographic field of membership, so the counties that you serve, and the NCUA finds that a majority of the population in your field of membership is in low income qualifying geographies, then by extension, they will grant your credit union a LID. So we have seen a few cases of some credit unions that have actually undertaken field of membership expansions or modifications in order to obtain or retain their low income designation through this route. So it's certainly not the majority, but it is another option that we wanted to make sure folks out there are aware of. Next slide. Wanted to spend a little bit of time going through the benefits of the LID. First is the ability to accept non-member deposits from any source up to the greater of $3 million or 50% of total shares. This is mainly applicable to federal credit unions who face restrictions upon, in terms of where they can accept non-member deposits from. The next benefit is the ability to apply for some grants offered through the NCUA's Community Development Revolving Loan Fund. So this is another service that we do offer. The next benefit is probably the most common reason we hear clients seeking to obtain or retain the LID, and that is an exemption from complying with the member business lending cap. So if you have a growing commercial lending practice, at a certain point, having the LID can be very beneficial in order to enable the continued growth of said practice. The next benefit is the ability to include subordinated debt, also known as secondary capital, in your net worth ratio calculation. So typically, subordinated debt or secondary capital would count against net worth. This is a benefit the NCUA offers to help incentivize credit unions to focus on serving low-income populations who tend to be net borrowers, not net savers. The last benefit is another one that's limited to federal community credit unions and certain state credit unions that have the field of membership rules drawn up in the same way as the NCUA, and that is the ability to extend membership to those who participate in associations headquartered in your community. So this is an extra affinity beyond the standard lives, works, worships, attends school in your community. So we do see this as a big benefit for federal community credit unions. In terms of what CUCollaborate does to help credit unions obtain and retain their LID, we've got both software and strategies that we offer. On the software side, we've got three main tools to highlight. I have some slides to go over the first two a little bit later in the deck, but the Analyze CU Lid Report, primary benefit of this tool is to enable a credit union to determine its current low-income member percentage and identify opportunities to clean and enrich their data to improve that percentage. The tool also enables the tracking of your progress toward lid over time through, if you complete multiple uploads of your member data. Next, we have Expand CU. This is our mapping software. Typically, we use this to support field of membership expansions, but it does help with the low income designation as well, because it will allow you to visualize your credit union's data, so your branches, your membership, as well as your field of membership rules if they're geographic, and also see the low income areas in your surface area. Last but not least, we have an API. We've got several APIs, but our lid API specifically will enable you to test individual addresses to determine whether or not the address falls in a low-income geography. On the strategy side, so this is where our consulting services come in. Sorry, do you mind if we go back? We really start with data cleaning and enrichment. These are typically the fastest returns in terms of being able to spend a little bit of effort and see material increases in your lid percentage. So things like identifying physical addresses for PO boxes, identifying students and military members. On the marketing side of things, we will help you visualize low-income areas in your service area. We'll also provide recommendations such as targeting promotions to lit areas. And then a little bit of a preview for the second half of the presentation. We'll also talk about targeted acquisition strategies to attract more low-income members to your credit union, such as forward flow lid lending partnerships with partners such as the National Auto Loan Network. Sorry, next slide. This is an overview of what a consulting engagement looks like for those who are seeking to obtain and retain their low-income designation. It begins with the discovery phase where we get to know your credit union, understand your previous attempts and experience with the designation. Next, we'll move into the analysis phase where we will analyze your member data, understand exactly where you stand relative to the 50% minimum, explored opportunities to boost that percentage through cleaning or enrichment activities. The next phase is actually undertaking those enrichment activities or member acquisition activities if that's the recommendation that we've delivered at the time. And then finally, once we get you close enough to the 50%, we move into the NCUA review process where we guide you through the submission process, provide instructions, help you create the member data file for the NCUA to analyze, as well as support any questions you might receive from them during the process and help plan next steps once you have the results. We do have it as a cyclical process because we find that it's not unusual for a credit union to have to go through this more than once. It's an iterative process. Every time we get you a little bit closer to lid, and ultimately hope that you are able to keep it. One note, once you have obtained your lid, if the NCUA finds that you've fallen out of compliance, they will give you 5 years. It's called a 5-year cure period to come back into compliance. So that's another reason we have it up here as a cycle, since it really is an ongoing effort. Next slide. The point of this slide is to explain a little bit about what the NCUA's process looks like. Once you've submitted a request to the NCUA to assess your data for lid and have provided that data to them, they will first geocode all of the addresses. They will take out the ones that don't qualify. So I've mentioned PO boxes and business addresses do not qualify. Then they will determine the number of members who do qualify, who live in low-income areas, or those that count as military based on having a military base address. And then if the credit union has identified students, they will incorporate the student counts into the results and provide you an assessment report. Next slide. This is a screenshot of the Analyze CU lid report. So you can see it will show you your current low-income member percentage, as well as some high-level information on the right, such as the number of unique members that were identified in your file, those that qualified for lid and those that did not qualify for lid. On the Details tab in this software, you'd be able to see a full breakdown of exactly how many members qualify for lid based on residence and lid geographies, based on attendance of high school, as well as the counts of the members that were found to have PO boxes or unknown addresses. The tool will give you the opportunity to export your data so that you can dig deeper into the results. This can help with the data cleaning process. And then, as I mentioned before, if you upload your member data over time, you will start to see a trend line showing you the progress towards that 50% minimum. Next slide. This is a screenshot of Expand CU. This is our mapping tool, as I mentioned earlier. What we're showing here is an example of a credit union's branches and headquarters in the purple and the little red balloon, their field of membership in the tan, and then all the low income qualified geographies in green. So this can be a useful tool for your marketing teams or even your branch teams to help identify, which areas in your service area will have low-income members or low-income potential members to help you, target promotions or even look at indirect lending partnerships in advantageous areas. And then the next slide. So for credit unions for whom we find that data cleaning alone will not be sufficient to get you over that 50% minimum, we'll want to look at some longer term strategies and recommendations. The first is built around the credit union's internal tracking processes, doing things like updating your member onboarding process to identify those members who are attending college, tracking the school name and the graduation name, just as an example. Then we'd want you to look at prioritizing low-income qualifying members or potential members in your marketing efforts. Next, we would look at additional enrichment efforts that you can undertake to identify, other college students or military members who do not live on military bases. And then last but not least, we would recommend focusing efforts on attracting lid qualifying members to your credit union. And this is actually a great segue for the second half of our presentation, where the National Auto Loan Network will talk about the exciting new partnership we have and what we think is a great approach for credit unions to attract low-income qualifying members. Ben, back to you.
Fantastic. Thank you so much, Jason. If you do have questions regarding Jason's presentation, you can continue to populate them in the chat or the Q&A section of the webinar. We will address them during the open Q&A segment of the presentation here today. But as Jason mentioned, also wanted to spend some time talking about a very tactical way in which credit unions can strategically seek to attain and retain their low income designation status. So like I mentioned earlier, a lot of what I do with CUCollaborate is building relationships that helps CUCollaborate do more of the things that we are helping credit unions with. We don't anticipate getting into, for example, the auto loan business, but we do see that credit unions obviously are in that business and could leverage some of the things that we have already built to reach more members who are in these populations that would help them to qualify for their low income designation status. And Q, the National Auto Loan Network, wonderful partner of ours. A brand new relationship here as of kind of in the fall here, and this is the first time we're really getting to get it in front of our credit union folks. They've been wonderful advocates of credit union service to members and reaching the underserved. And so with that, I'm going to hand it over to Marco Rasic, who is the president and CEO of the National Auto Loan Network. Marco.
All right, thanks, Ben. Thank you as well, Jason, Michael, thank you. Good to speak with you all today. Our company, for the last 14 years, has worked with consumers across the United States with the simple idea that, we believe that there are millions of consumers that have a mispriced auto loan, meaning they have good payment history, they have seasoning on that auto loan, but for some reason they obtain financing and generally out of convenience when they purchase the vehicle. So we definitely have focused on that approach and look forward to talking about it today and how we can work specifically with low-income designated consumers as we have the last 14 years. So my executive team is on the screen there, and actually 3 other members are on this call as well. Kim Feely, our production manager, Eddie Navarez, our chief lending and compliance officer, and Clancy Merrick, our executive vice president. So let me say this: we're an Orange County, California-based business. We have approximately 100 people within our business here in the city of Tustin, California, and we do business across the United States in almost every state. So if you want to flip it over there, next slide, please. Thank you. All right, so picture of the team, building. Generally work with credit unions, credit funds, and finance companies, where we kind of have 2 paths. We can be the originating lender, and we can sell the loans servicing released, or we can have an ability to originate the loan on behalf of our credit union or finance partner. So we have kind of 2 paths there, whether a credit union would like to service the loan and work with their members, or we can refer to an external partner as well. All right. Thank you. So our mission since 2010, again, is serving the underserved. We really, our motto from the start has been making loans easy, right? So a loan made easy for us is it's shocking the amount of consumers that really, if you think about it, when it comes to refinancing an auto loan, they really don't think that's even possible, right? It doesn't really come to mind because you think, gosh, I could refinance my mortgage. Maybe I could look at my credit card debt and maybe balance transfer it over, but there's no real necessarily market presence for refinancing auto loans. So we've done that the last 14 years. And, we've originated more than $1.5 billion since 2018 to consumers across the United States. Now, of those consumers, almost 3 out of 4 were low income qualifying. So, in serving the underserved, it really comes to mind where, we are reaching out to these consumers, and that, from day one, we've always focused on direct mail. So we build files with the credit bureaus based on criteria that has been designed by us and our credit partners. And we reach out to these consumers through direct mail versus buying leads online and being in a competitive marketplace, let's say with somebody querying online to refinance their auto loan. Now, of 3 out of 4 of those people that are low income qualifying, there's also consumers that are from CDFI qualifying areas, so more than half of our business as well. And as I said, we work with Equifax, TransUnion, and Experian. So if your, let's say, lead bureau is Experian, we're able to use that as our lead on the advertising side, the marketing side to the consumers, TransUnion or Equifax. But essentially the way, if you can imagine how it works, is we reach out to these consumers using our NALN brand, and we'll go through direct mail through a specific campaign. So in a relationship that we would have, we would build a specific campaign within your field of membership. We would give the consumers a simple call to action. It's just one of two things: either call us Monday through Friday, 7 to 5 Pacific time, or go online, or Saturdays 8 to 2, or go online at any point in time, and we will return their call and complete the validation process. Now, what's going to happen as a part of our process, once we get 3 years residence, 3 years income history, we book the vehicle out, we get a payoff. We're going to, we have an API that is connected with CUCollaborate. At that point, we'll know whether that consumer qualifies for low income designation based on their geo-targeting. Okay, so we're able to, at that point, if we had a relationship where you said that you wanted potentially 50% of your funded loan volume to be CDFI qualifying, LID qualifying, we could do that, or we could make it 100%. So there's definitely some opportunity there. So once we ping the API, it comes back, it gives us a result, and then we're going to go ahead and review the application. Now, on the application side, we're going to look for minimum incomes. We're going to look at certain year or newer, certain miles or less on the collateral. We're going to look at loan structure. We're going to make sure it fits your particular buy box. And we kind of have two paths. We can either underwrite the loan ourselves with our credit team, or an agreed upon buy box. We would have that up front and be in our loan origination system, or we could pass one by one an application to your credit union to decision. So it's kind of a simple path there. Either one we can do. All right. At that point, we would present the approval to the consumer. We offer and sell our ancillary products as optional. There are many loans that are done without ancillary products, such as a GAP or a vehicle service contract or an MBI. We offer and sell MBI in the state of California, as it's an insurance state. We're a licensed insurance agent in the state of California. Once a consumer said, yes, I'd like to go forward, what we would do is, on the path I talked about a minute ago, we would either use your loan document, your membership application, your credit application, and prepare a DocuSign, or we'd use our own. Where downstream we would sell that loan to you on a purchase and sale agreement. So pretty straightforward, where we would be the originating lender. We prepare this DocuSign, send it to the consumer, and then have a signing call where we go through everything, explain kind of what happens next. Now, once it's complete, our validation or verifications team will take over. Our funders, they contact the borrower. One of our funders would, that would be assigned that file. They would validate application. They would validate the collateral. So we're going to run an auto check, which is an Experian product. We have many, what I would say, processes involved in our path of onboarding a consumer loan. Now, once we thought that the loan was complete, that loan file would then be uploaded either, let's say, to a CUDL 360, Meridian Link, secure email, SFTP. We have many options. Route 1, there's many options to do that. But essentially from there, we're going to pay off the current lien holder, soon to be previous lien holder. We get a lien release or title, and then we have an in-house lien perfection team that would perfect that lien. We have 23 states that are ELT, where we can do that electronically via the web, and the other states we would do it in a paper fashion, and we would remit the fees, and we would go ahead and get that lien perfected, and then we would provide biweekly reporting to somebody on your side that would be assigned to our relationship. All right. One thing I did want to mention, as a part of the funding process, when we did send the file over, the expectation on our side and the consumer side is that we would have the membership application as a part of that documentation. As I explained, we'll look for you to memberize the consumer. And at that point, you let us know that the loan is able to fund, and then we go ahead and take it from there. And now they're onboarded as a member. I would say that 90% of our loans are typically with ACH or an automatic payment. So, if you have a ACH form as a part of your documentation, that would be great, because the goal is to have the consumer that has the performing loan. Typical seasoning on a loan is about 13 payments made, and the average amount financed is about $23,000 a loan, just to give you some idea on metrics. All right. But the goal is to have the consumer to continue to pay, whether that's 45 days from the date of contract, 60 or 90 days, depending on the program. So, all right. Michael, any questions right now? Okay.
We'll wait a minute. Go ahead.
Let me just on the last slide here. I think the opportunity for me is we can very simply look at your credit union, your field of membership, and we could establish, based on your buy box, we could establish a projection of business. And I think the next step, the simplest way to go, would be to book an appointment with CUCollaborate and NALN, where we could, within a 30-minute call, go through and kind of detail the economics and kind of how the process would work. But I can let you know that from when we decided to do a campaign, it would take about 3 weeks to have your first funded loan. So it's not a real long process. For sure. And, volume opportunities are anywhere between $1 million a month in funded loans to, 10 million a month. There's definitely a vast marketplace of consumers that have mispriced loans that are LID eligible. So, all right. Thank you.
Wonderful. Thank you, Marco. Definitely want to get to some questions here. As Marco mentioned, would love to learn more about maybe some of the things you're working on at your credit union to obtain or retain your low income designation status. If you'd like, actually, if we could maybe drop some of these links in the chat for folks. If you want to, you can go ahead and schedule some time. It's directly on my calendar. Again, would love to learn more about what you're working on and how we might be able to support through CUCollaborate in our partnership with NALN. And then we've actually also conducted or put together a brief scoping survey. We can actually come to that meeting with a very real proposal on the amount of volume that we could generate with regard to low income designated folks to your credit union. So if you want to have a very tangible takeaway from our initial meeting, we can put that together. I see that there are some questions coming through the chat, and I know that Michael's been monitoring. Michael, do you want to throw out some of the questions here?
Absolutely. I believe this one is for NALN. Marco, we had a question from Stephen Clark. Are you selling my insurance/backend products or yours? Who gets the income from the sale of a product such as Gap?
Yeah, we would offer and sell our products. We have two administrators, National Auto Care and Smart Auto Care, that have done our administration work for the last more than a decade.
Excellent, thank you. And Attila has a question, I believe, for Jason. What is the qualification for military members? Active, not active, reserve?
Sure. So this is going to be a bit of a detailed answer, but the NCUA's default process for identifying a military member is based on the address. So if the member has an Army post office or a Fleet post office address, they automatically count them as a military member. Important to keep in mind that only a majority, not all military members identified within your member data are going to count towards LID. But if you use an alternative means for identifying military personnel, it would be active duty personnel. So the Military Lending Act website is a free government resource that can allow you to determine the military status of any person with their name and social security number.
And Jason, I know you answered these in the chat, but just for everybody's knowledge, if we're cool to just review these real quick.
Sure.
Caitlin asked, with regards to the PO box issues, is this different for the native initiatives, CDFI? Asking because proportionally members living on reservations are impacted by their addresses being PO boxes.
Yeah, so this is a little bit, outside the scope of the webinar, but the CDFI fund will treat PO boxes differently depending on the type of target market for which you're trying to qualify the loan. The geographic-based target markets out there, so are typically investment areas. The CDFI is very similar to the NCUA in that they will not accept any PO box as a means to verify physical location within a geography. This does come up quite frequently with rural populations and Native American populations. I know some clients that have undertaken extensive efforts to identify physical locations. I will tell you that the CDFI accepts latitude and longitude instead of the PO box, but they will not accept a PO box.
And one other one that you'd answered, thank you, Jason, from Adam. Do we know if the NCUA uses the same geographic boundaries to identify low-income populations as the CDFI fund? The CDFI fund has identified opportunity census tracts as their measurement. Curious if these geographic overlays are the same or if they differ to your knowledge.
The short answer is that there is some overlap, but they do differ. They differ for a number of reasons. One, the NCUA uses different census data points to qualify geographies as low income. The other reason is that the CDFI fund has a number of different geographies. So there are persistent poverty counties, there are opportunity zones, and then there are investment areas. Each of those have their own regulatory defined criteria for defining what makes up those areas that use different census data points.
Awesome. I'm not sure if this question needs clarifications. I think it's pretty straightforward, but you can help us get CDFI funded loans to the members, potential members who need them, from Juliana's asking.
We definitely can.
Yes.
Yeah, we have a way to do that as well. Yeah, because our outreach is one by one directly to each consumer. So we have a way to identify consumers, whether it's LID or CDFI. So we can get very granular when it comes to, not only creditworthy, of course, really for us in the direct mail or the what I'll call hyper targeted world, the only kind of the one off is year, make, model, miles on the collateral, loan to value, ability to prove income and that. But we have, as far as the capabilities from the credit bureau, we have a very robust solution for that.
And then on the CUCollaborate side, we have APIs that help identify whether an address is in a low-income geography for NCUA LID, as well as whether the address falls in one of the CDFI-approved geographies, such as a CDFI investment area.
Awesome. That covers the questions. We did have a comment from our CEO and founder at CUCollaborate, Sam. Wanted to reiterate that we do this not just for LID and CDFI, but also ESIP with the NALN if there's interest in other programs as well. This is coming up. There will be more info on this, but probably also the Greenhouse Gas Reduction Fund once the guidance around that is more defined. So keep your eyes and ears open for that. We'll make sure and share news. But otherwise, any other comments from panelists? It looks like we covered our questions in the chat.
Yeah, I think there was one. This one's going to go out to Jason, and then I was going to have one. I actually had one for Marco as well. Questions that generally come up from our credit union clients, etc. Jason, I'm a credit union who kind of wants to take it upon myself right? And I'm looking at my data. Give us some words of wisdom there. Are there resources out there? Yeah, speak a little bit to that for me.
So there are a number of resources. We've included hyperlinks in the appendix slide of the webinar deck, which will be shared with all participants. Mostly these are links to resources on the NCUA's own website. They have a very detailed frequently asked questions page, which provides a lot of great information for credit unions who are looking to obtain the designation.
I will go ahead and pop those in there. These are from the NCUA website, I believe, Jason. So the font's a little funny, but these are all linked, and they, as Jason mentioned, will be in those slides when I send them all out tomorrow. Chris has a question for NALN. I thought that I heard that NALN may not be in all states. Which are you not?
Yeah, so we're in 44 states, so we can pass over a state table to you, so no problem at all with that. There's actually there's a few states that there's a brick and mortar requirement, such as Nevada and Mississippi, for an example. So we're not in those states at this time, but looking for that opportunity down the road. But we'd be happy to pass over a map to you. No problem. Thank you for the question.
Yeah, we'll definitely get that
Ben,
to you as well.
Go ahead.
Marco, another question we gotten from a lot of credit unions is turnaround time. Would love to learn a little bit more about, okay, I'm ready to go. I want to get in front of more low income designated qualifying members, and I'm ready to go with NALN. What's the turnaround?
Yeah, so what we would do is we'd analyze the credit criteria, we'll call buy box or guidelines. We would establish based on field of membership. We would then look at the lead bureau, and we would say, okay, what's the available population? And then we would probably hyper target from there. We'd look for consumers that have potentially a certain interest rate or higher, a certain number of payments left, and really get in the weeds on focusing on the right consumer. And then what we would do is build a campaign within our loan origination system where it'd be specific to a credit union. So with each consumer that would get a letter in the mail, it would say NALN, but it would have a specific personal ID on it. So when that consumer applied online or they called us, it would be specific to our campaign that we're doing together. When that application would come in, we would underwrite the loan, 3 years residence, 3 years income history, book the vehicle out, get a payoff, and then look at the criteria and either pass through the application through one of the portals I mentioned or underwrite the loan ourselves. But from kind of when we start to when you receive your first loan to fund is about 3 weeks. And we have different sizing available based on your appetite on a monthly basis that we can figure out together. But there's a real opportunity, Ben, as we kind of spoke about based on the population. Just to give you an example, 330 million people in the United States approximately. When we go to the bureau, let's say there's 220 million scorable records. We'll look for consumers that all of their trade lines are current, no 30, 60, 90-day delinquency. They have a certain number of trade lines or more. They've been in the bureau a certain amount of time. And then we'll overlay an auto loan and then we'll say, okay, who has an interest rate above a certain percent? Who has a balance of, a certain amount or greater? And then we look at payment history, let's say with that 6 payments or more. So we'll get really in the weeds on identifying the consumer before we market to them. All right, and give them a very simple call to action. So about a 3-week window, Ben, to do that.
Fantastic, thank you.
Okay.
Michael, any other questions coming through the chat?
Not that I can see here. Unless there's anything else from the panelists, I can go ahead and wrap it up. If you've not completed the poll that we submitted earlier, sorry, the very first one was a ranking and was not as much use to us. So if you've not submitted your answers to the poll, please go ahead and do that. It really helps us better serve you. We got one more. Is there a minimum loan origination volume for a small CU?
Yeah, I think we should should talk directly on that. I think there's a way to get very granular in the data and then look to onboard and build over time. So I think that's a conversation we should have. Who did that come from? Michael?
It's from Miranda at Lake County Educational.
Yeah, so Miranda, we could build a a process over time. We could start a certain number of loans, but be happy to identify the TAM or total addressable market and kind of build from there. That's easy. One thing I wanted to mention was when we build a specific campaign in our system, you would be considered what we call a tier 1 lender. So meaning when that application would come in, it would either be underwritten by us and fulfilled, or it would be passed to you, but there would not be what I would say a competitive marketplace where it may go to another credit union or another, or 4 or 5 credit unions. It would go to you, and only if you passed on the application, it would go to somebody else. So it'd be very specific. So you may experience today with your dealers on your indirect side, potentially you may lose a loan for interest rate or because of some stipulation. In our world, it goes to you directly, and there's not a competitive marketplace. So, what our credit unions see is that the rates, believe it or not, do not have to be the lowest. We're looking to save a consumer on interest rate, monthly payment, but just generally better loan terms. So you don't necessarily have to have a whole new program just to do business with National Auto Loan Network and CUCollaborate on this LID initiative and CDFI to follow. So you really can kind of go with what you have. We'll give you feedback on your current rates, but I can tell you this, a lot of times we're going to probably say maybe that should be 50 basis points or 100 basis points higher in many of the tiers, but we'll give you that feedback. Be happy to.
Awesome. Thank you, Marco. And we will be sure to connect you to. I'll make sure to pull the contact information. We'll figure that out for you. So
thank you.
Ben or Jason or anybody else, is there anything else that we wanted to touch on today before we wrap it up?
I think there's one more question in the chat from Juliana.
Can members with bad credit be within the parameters, Marco?
Yeah, actually, we have a national relationship with Open Lending. So we have a direct connection API with their LendPro system. So, you would think that, gosh, how do consumers necessarily, you would say LID maybe equals, maybe somebody would have some slow payment history or so forth, but we can get very granular around your buy box where we can get, we can provide consumers that have a 750 FICO, just like we can provide consumers that have a 600 or higher FICO. There's an ability for us to do that together, but that's really where, what I would say, the reason we're 14 years in, right? Because, we have that experience, and we'd love to get down that road with you and identify, truly underserved consumers that, we can provide better terms to. One thing I will say, a couple of years ago, on average, we could save a consumer about $100 a month on monthly payment. Today, we're able to save consumers anywhere between $45 to $50. But I'd argue that $45 or $50 today may be more than $100 a couple of years ago. So, we still have a very compelling offer to each individual consumer that, you really only see the result in essence where a consumer applies. We do the campaign. We kind of do all the heavy lifting on the marketing, the advertising. But I can share with you that we'll get you a result. We will be able to bring you new members with a performing auto loan, and we'll have a great partnership for years to come. So, thank you.
Awesome. Thank you. And we had one more come in from Jessica. Sure. Would you exclude loans that are already financed with us when sending out marketing materials to potential members?
Absolutely. Yeah, it's very easy for us to do. Yeah, we would just, the way we identify that is we would ask you your lead bureau if you, if you're listing on a certain bureau, we would make sure that we use that code. So yeah, it's very easy for us to do. Great question, though. We would not refinance your loans, put it that way.
Good to know. Great. I think we've covered every question, unless there are any others that might pop up. I'll pose it again, Ben or Jason or anyone else. Any final comments or otherwise before we wrap up?
No, I just want to thank everyone who was on the call today. We know that this is a big deal for a lot of credit unions, not only the ones that we serve, but also across the country. Some really a lot of potential here to reach folks that are not currently being reached by credit unions. We're really excited about the opportunity that exists, not only with our relationship with NALN, but just broadly within the low income designation status, and the fact that you all know about and care about this designation is really important. So thank you for your time today.
Thank you as well. Thank you, everyone.
Thanks,
Hope
everyone.
you have a great day. Thank you.
Thank you.
Take care.
Bye.
Take care. Bye-bye.